So here I have the silver inflation adjusted endgame roadmap. And just for this mid cycle, I have for like in April of 2023, I have a triple digits already for silver.
Mhm.
And then after that, over 580 by the end of the decade. So let's say in 2027.
Awesome. Joining us today on Wall Street Silver is Patrick Karim. Patrick is a proprietary capital manager and chart trader since 2006. How is the day going today, Patrick?
Hi, Ivan. Hi, Jim. Man, my day is doing great. Always head over heels into charts, and yeah, no, it's just grinding along there. I'm very honored for you guys to have invited me to Wall Street Silver podcast. There, it's a true honor for me.
First question from Wall Street Silver member is you were speaking about the silver quarterly on Palisade Radio last week, and your conservative target was $200 for silver. How do we get there, Patrick?
Wow, that's like the heavy artillery question right away. Well, for silver, I have like multiple targets, and the takeaway is they're all upwards. Of course, like there's a bearish scenario where it could be the end of the world and crash down. But even like I looked at the 200-year chart for silver, and the targets are way up. And since it's denominated in a fiat currency where there's continual debasement, money supplies, etc., it has a tendency to move in a logarithmic fashion. So on a big scale, silver, whenever you have measured moves, you could probably measure them in a non-greedy way, linear way, which gives you smaller targets close to 60 or those regions, or even close to triple digits. But ideally, over time, it has a tendency to go parabolic, and you can measure in on log scale percentage gains. And yeah, those targets, I have a multiple of different techniques, and they bring me around 115, 200. I have some crazy ones like really close at 800. But the way you have to see it is like you're shooting at at a a target in a
Mhm.
shooting alley, and sometimes you have to look at where it scatters, right? Where most of your targets hit, and that's probably where we're going to. And the closer we get, the more we'll be precise. But definitely, like in the six, we're going to revisit these all-time highs around 45, 50 guaranteed, and then we're probably going to overshoot even this year. And what was the hard part of the question? I'm making believe I didn't hear it. The
Uh,
manipulation.
there's first part of the question is how do we get there, and the second part is and when do you see the manipulation come to an end?
Do you pay attention to those things, or are you purely technical, Patrick? Do
Oh,
you care about that?
look, as a pure chart trader, the default answer should be I don't care about anything. But I know that what I've thought stuff that I had set in stone in the past, and over time I realized, Patrick, maybe you were like too draconian, with your way of thinking.
Mhm.
So there's probably, I think it's aggregated. Definitely there's manipulation because we're humans, right? If I would manipulate, my kids try to manipulate me emotionally. Of course, it's in our DNA to manipulate whatever we can. So that's
Mhm.
definitely there. But I'm not going to let the manipulation override the bullishness of the charts.
Mhm.
I even think it accentuates it because the more they push it down, eventually your kids can't manipulate you anymore. You catch on to what they're doing and say, "Hey," and then you take out the stick. What? No stick for the kids, but you punish them, send them to the room. And I think that day is with increasing inflation, increasing interest rates. I think whatever game they're playing right now, borrowing cheap money to short or whatever. I heard like some super smart guys on your podcast and they have an explanation why it's easy for banks to short or why they're doing it or the arbitrage, like all that stuff. But one day that's going to end. It ended in 2002, 3 when silver went ballistic. It ended in 2009 out of the GFC. It ended in the 70s twice. So it's going to happen again. So my job as a chart trader is to see when that manipulation, for whatever macro reason, they can't do what that game anymore. That's when you want to be long silver. And if they're doing that game right now, that's a perfect occasion for people to actually go long silver and
Mhm.
ride it when they can't do it anymore. Because eventually they won't be able to. The macro tidal waves are going to kick in, and they won't be able to. They'll have to change their positions there and cut their losses.
So one of the criticisms I've heard about technical analysis, when it applies to a manipulated market, is how can you look at a chart and see a trend when there's such obvious manipulation having that can just regardless of, what the trend is or the chart is telling you is likely to happen, if you got some guy who's going to come along and
yeah, that's why you have to zoom out. It's like, let's say I'm playing a penny stock and there's not a lot of volume. Maybe me with like my budget or somebody else has more money, they're able to manipulate it. But eventually the supply and demand mechanics, they override. So even they manipulate, they bring it down. But somebody on the other place of the world said, man, this doesn't make sense. Silver at $17. And eventually they're going to buy those dips. And the guy's going to try to keep pushing it down, pushing down. That's why you see those nice multi-year bases like gold and silver did, where the higher lows, hitting that resistance where people are pushing down the price.
Mhm.
And eventually even their button is not strong enough to hold the tidal wave that's coming in. The capital flows, when they leave the US equities, as soon as there's a crash or the interest rates go up and the price to earning ratios, they don't make sense to hold growth stocks on the long term, all that money is going to seek a home and they're going to go into hard assets when they see like the money depreciation, all that. And even if that JP Morgan guy is pressing the sell button on everything, he's gonna get rolled over. So eventually he's gonna have to flip his positions like he did in 2003 or 2010 when it went crazy. That's my mindset right now with these guys are pressing the sell button.
you and I were sharing some messages on Twitter privately, and you were telling me you need 3 touches for something to matter, for it to be a trend line, right?
So every time a line is tested, it's starting to morph into existence. The market's saying, okay, that's a support. It's a higher low because there's more buyers and sellers. So the first touch, the second touch. So now it's a potential. As soon as it touches a third time, it's going to be now a valid trend line. So if it breaks below that, then whatever pattern we had on top, then you have to do the measured move downwards and you have to see where the support is. But I would, if ever you have doubt or there's noise or there's volatility, or like see that Silversqueeze at January, and a lot of people say, oh, that was noise, or that March Madness, people consider that noise on the smaller time frames. The secret is you have to zoom out and go maybe on the monthly time frame to try to reduce some of that noise.
Gotcha. Well, show us what you're talking about. That was a little short one for 6 months. Do you have something you want to show us where you zoom out and see the big picture?
Sure.
Show us how the real chartists do it. And I love your name, by the way, Badcharts. I mean,
Oh yeah.
When I first started following you on Twitter with your handle Badcharts1, I was like, is this guy like poking fun at himself, or because I was like, this guy's charts are just, I've never seen anyone chart like you do with so much detail and looking at so many things out of the box. And I was like, is this guy really charting, or is he making fun of chart technical analysis with his name? And I just wasn't sure for the longest time until I realized, holy shit, this guy's operating like on a different level than most people.
Thanks, Jim. But yeah, sometimes the line is thin because I'm like in my nature, I love experimenting. And like I was a nomad. I lived in Quebec. I lived in Europe many years, came back. My father's like Lebanese, multicultural, a whole bunch of stuff that I'm always looking at different facets. And some of my rabbit holes, like they didn't pan out. And yeah, no, like I think the chartings, I try to make it as effective as possible. And what I've realized is on the higher time frames, the less you don't have to trade off in, and you're going to ride like these critical trends. Like even here, the silver chart, like, I don't know, man, I've drawn it so many times, but it's such a beautiful, such a beautiful chart.
All right, so we're looking at something going back a little bit more than 10 years here, probably 11 or 12 years to the last big bull market to 50 or 49 from 2011.
Look at this beautiful base. When I saw that, the volume here, you see, guys, that's all the people. So all the people that got trapped up here, whoever they are, over the years, they gave up. They said, silver's manipulated. I don't want to be a back holder, etc. But us, we're so lucky that the patience of these guys, or the lack of patience of those guys, and it's fully understandable, that sold, is creating this insane opportunity for everybody since 2019. And especially in the last year's consolidation, it's like, unless there's a total breakdown and the whole economy breaks, and then they have to print even more trillions, the setup is pretty beautiful. So even here in May of 2020, that was the go time for silver. When I saw this for the silver futures, the breakout right here, I said, holy Moses, man, this is like the opportunity in lifetime. And 2 months later, look, there's one thing about these wicks. I don't know if candles, guys, at the close. So the candle starts at the bottom, and wherever line it's on top, the horizontal line, that's where it closed. The wicks is noise from smaller time frames. So let's say during the month, the price action went all the way up here, but the sellers came in and they brought it down here, and vice versa. So after this breakout here in May, the next month, the price action went all the way back down to test that 1 year inclining 1 year moving average. And a lot of people say, false breakout. On the daily chart, it was probably false breakouts. On the weekly chart, false breakouts, manipulation, whatever. Silver is never going to make it. But this was a clear paradigm shift, 6 year base. Let's just measure that. 2,600 days. I don't know how many, 87 months. That's how many years is that? 8 years, maybe. It's a lot of.
Yeah.
So if you're a silver aficionado and you don't want to get triggered out, go on the monthly chart. You have to. It's so volatile, and the only thing that's happening here in this month's candle is just we came and retested that inclining 1 year moving average. So until we close below that 1 year moving average, and here I'm drawing my my trend lines, my possible trend lines on the closes. And I'm going to put it on the closes. I like 1, 2, 3. We're right here at a confluence of support. So this is probably the third test to morph that trend line into existence. We're removing the noise from the smaller time frames, inclining 1 year moving average, coiled right under that $29, which is insane amount of resistance called support. And it's because I'm used to my tool, which is TradingView. So right here, this is we're coiled, man. I'm the most optimist I ever been for. I love all the wall of worries. I seen on Google Trend, Silversqueeze, even if your membership, it keeps skyrocketing on Google Trend. Nobody's Googling Silversqueeze like in January. Nobody's Googling silver stocks like in January or whenever we had the peaks. Nobody cares now. This is the optimal ninja breakout we could have, even if we're all the way down here. Look, I get the grief I get on Twitter is my word of the use, imminent. Maybe it's my French. Maybe I shouldn't say that word. But since I'm dealing monthly candles or quarterly candles like I love to, for me, imminent is a candle or two. So if I'm off by a candle or two before this thing breaks out, then for a day trader, it's a lifetime, you know.
So for you, it could be 2 months still.
Yeah. So, and even often you'll see my charts. I'm on the quarterly chart, like. For me, like a quarter, 3 months, like nobody does that. And it's getting squeezed. So it can easily, well, you know what? The landing strip is running really short, Jim, honestly. Right now, it could maybe have months. It could squeeze in maybe a couple more months where that 1 year moving average is catching up, but it's going to give. Something has to give, right? Like, the next following months.
I think that agrees with even my amateurish looking at it, that this pullback to 25 is almost done. I mean, I think sort of bouncing at the lower 25, maybe 25, 26, 25, 25. So maybe another 50 cents of downside, and we'd be right at that lower trend line. Where's the 1 year moving average right now?
The 1 year moving average is sitting at 25.55.
Okay. And so if it briefly fell through that for a day, that doesn't mean anything. That would be the wick. You would need to see a monthly close.
That's right.
Below that level before you would care.
Yeah, exactly. Just like here in pre-March Madness, there was a lot of clues that something was wrong. Here, what I think silver, I was super bullish. Somebody looks at my tweets and back in 2019 there, I think if we didn't have March Madness, like whatever break, what's happening here was happening back here. So I thought right here would be exploding upwards. Gold had already broken out in June of 2019, and silver usually follows suit within a year. It follows suit. Gold's move pretty much all the time. I thought we were going up here, and when we had that breakdown below this this flag right here, below this horizontal breakout line, and then below that 1 year moving average, something was up, and then we suffered this dip. So for anybody who's worried out there, for me, like a worst case scenario is another type of situation like this. So don't be levered up, hold your physical or like 1-to-1 ratio. Don't this could happen at any moment. But if ever we get this will be the trampoline to make us go ballistic after. Because silver reacts to monetary imbalances. So whatever they do, whatever craziness they're going to do to keep nominally inflated the NASDAQ. So pension funds, they say, we made the 1, 2, 3% this year. But if you adjust for inflation, you lost money, right?
Yeah.
The psychology, they're going to try to keep the US equities like in a range, 10, 20, 30% sideways, even if inflation kills it. The move of the violence of these drawdowns, hold on tight, or if you have spare money, this is not financial advice, guys. If you have spare money, buy here, and then you'll get a like a slingshot back up there. And this is like a reset chart. This is like 200 years of data. So whenever gold is the orange one. Whenever gold does a new high, so here it did a new high, silver followed suit within 3 months to maybe 45 months because of the GFC crisis. It took more time. Silver follows suit, does a new high. Gold did a new high. Silver right away did a new high. Right here again, gold did a new high right here before the 2008 crash. Silver did a new high. 2011, same thing. There's an arbitrage play right now in favor of silver. Is the fact that I'll merge them all on one scale on the left.
So gold made a new high last August or July, right? Late July, early August of 2020. Yeah. A nominal new high. So your thesis is, and I recall you tweeting about this a few months ago. Your thesis is every time gold has hit a nominal new high, silver follows within how many months typically?
Well, yeah, well, within maybe like 6 to 45, because here there was interruption of the GFC. So the longest time it took to catch up to gold is because of this this meltdown they had in the markets. Okay. But other than that, all the other times when there were no meltdowns, it followed it pretty suit. There's this relationship between gold and silver. They're like twin brothers or whatever, brothers and sisters. They're linked at the hip.
And it looks like silver, correct me if I'm wrong, I'm just looking at what you've drawn there. The black line silver, when it does catch up and set its new high, it typically overshoots gold, the orange line, in the catch-up process.
It does.
So on this type of chart, if silver were to catch up with gold proportionally, where would that put silver in the catch-up? Beyond 50, I'm sure, but where would that be?
The gold to silver ratio, this is the fuel that we have for silver to catch up. So as this goes down, it means silver is outperforming gold. And until gold, we hit at least the 2011 highs. So anything above that upper line is buying silver cheap. And anything down here below this line is buying gold cheap. So as gold to silver ratio goes down, then you're as soon as you hit these lines here, if you want to hold the precious metals, like if I just gave you a choice, you got to hold the precious metal. Which one do you want? If you're starting to hit these lines, these lower lines here, these lower ratios, you're better off start transferring your silver into gold. But over here, that means gold is way overvalued versus silver. And that's when you should be heavier silver. So this is the fuel. I'm always, when I look at charts, I see what's my fuel based on historic past performance. So right now you hold your silver until this lower line hits. And once it hits, then we could reevaluate where we like in the cycle, etc. But we've seen once, twice, a few times here in the 70s.
That peak when silver was, I think the silver to gold ratio was like 120 something, 126 or 113. That was like I remember that last year. That was like an all-time high for the silver to gold rate, or at least as far back as we have data. That was pretty amazing. It was and that was when I think at the peak of the virus panic, silver dropped down to 14 or something like that. Is that when that number got that bad?
Yeah. Super. If you had the courage, if you understood the look at that, $11, $12. That was insane.
Well, now you have some pretty aggressive upper end targets. How are you arriving? I can see the near term. We definitely have some breakout potential within the next couple of months. And it literally could happen anytime, right? There's nothing magical about that flag needing to fill itself out. Anything could spark it just to break higher and charge right through 28 and 30. But what is your upside target beyond that? I mean, you're sort of, let's talk about the fantastical type of numbers and how you arrive at that target.
So here I have the silver inflation adjusted endgame roadmap. And just for this mid cycle, I have for like in April of 2023, I have a triple digits already for silver.
Mhm.
And then after that, over 580 by the end of the decade. So let's say in 2027.
Now, is that based on just technicals, or are you thinking about the fundamentals of supply and demand or monetary debasement, or you're just coming at this from a purely technical perspective?
Just this chart. But I know, look, as a chart trader, I used to look just at a frame of a chart, but I started increasing my odds when I did start looking at macros, but only macros that I could chart. So if I could chart money supply, if I could chart the GDP deficit, I'll take it, you know. But just somebody saying they're printing more money, if I can't put in the chart, it's like, it's kind of vague in my brain. Like, I don't know what to do with that, you know. Were they printing money yesterday? And the charts, they showed me that there's a lag when they print money. So let's say every time they had a spike in the M2 money supply, it took maybe 3 months, 6 months, 9 months for that to be felt in the price of hard assets, gold, silver, etc. But in the charts, it's clear. And what they did recently there, man, the explosion of the money supply versus its like 24-month moving average, it's higher than what they did in the after for World War II. It's you can't even believe it. As soon as we close a monthly close above 28 for silver, especially a convincing close, not 20.05, you know, like let's say 28.50, like the market's going to tell us, it's going to be clear, just like gold broke out above 1350 and 1400 in the same month in July or June of the 2019, like solid close. As soon as silver does that, within 6 months, it's all-time highs within. So it could be much shorter, but definitely within 2 quarters, it's going to go up, a little shakedown, and then it's going to zoom back up. But guys got to be wary that eventually it's going to want to retest 30 from above. So that also markets, you know, that's what's going to happen after we go up to all-time highs. There's a high chance that we're going to have a wick eventually to 30. And in my, like our cycle roadmap, that's probably going to be the mid-cycle low that we're going to have maybe, I don't know, in 2024, maybe late 2023. Silver is going to come and retest 30, but from the top side. And then after that, it's going to be off to the races for those triple digits towards the end of the decade.
We appreciate you taking your time. Tell us about what's your website with Northstar? I'll put a link in the description.
Yeah, northstarbadcharts.com. So
Okay.
It's me and Kevin, like one place where we put all our charts, easy to search, super low cost membership, just to make it like almost the running costs there for the thing. And I'll keep posting on Twitter my big picture charts, guys. I haven't forgotten like all the support I get from Twitter and Wall Street Silver, guys. I'm gonna do a few articles for you there in the coming months before it goes crazy. The time to read up on these articles is before everything blows up, so you get the best value.
I will put the link in the description for everyone. Thank you very much, Patrick, for sharing your expertise. And let's do it again in, what do you say, 2 months? We'll do it again.
You call, I answer. Just like Eric Sprott answers you guys right away, I'll answer also.
Well, he doesn't answer right away, unfortunately. I've been asking, and he